Hello and welcome to Quant Matters, where we talk about the quantitative approach to investing and finance. Plots are everywhere in finance. Today we're going to look at the basic ones, which can be very helpful for piecing together an asset's behavior. In that sense, charts or plots are an extra bit of information you can use in your investing decisions. If you like the channel, you can support it via Patreon, where supporters get access to a quantitative asset dashboard and a written version of this material. Price plots are the basic and most common type of plot you'll encounter. There's not much to them on the surface. Your x-axis, the horizontal one, is usually a time series of evenly spaced dates, and your y-axis, the vertical one, is the price of the asset at each point in that series. They simply show you what the price was doing over that period. Did it go up, down, or sideways? It's also very common to have a subplot underneath showing traded volume in dollar terms. That gives you more color on the move. Was a lot of trading, buying or selling involved, or just a little? Price plots by themselves aren't great at predicting anything, but they are great at explaining what happened in the past. Here are a couple of examples. Enron, the emperor has no clothes. Enron was once one of the largest energy companies in America. Its stock climbed for years, then collapsed to nearly nothing in a few months once a massive accounting fraud came to light. The COVID scare. The S&P 500 lost a third of its value in 5 weeks as COVID hit in early 2020. Uncertainty drove the crash, and the recovery came within the year as markets adapt. Money, this one is more complex. It starts with activist investors and the general public piling onto an average stock called GameStop. Wall Street expected it to fail and bet against it. As the price rose, they were forced to buy shares back to cover those bets, pushing the price up even more. The cycle repeated several times, then the stock came back down once sanity returned. Price plots have a few limitations. They can't tell you what the actual return was, and you can't easily compare assets, since they each start at a different price in dollar terms. Take these two assets for example, you can't really tell which one did better or worse. Index plots solve this by rebasing or indexing every asset to a common value, usually 100. Here are the same two assets, now indexed to 100. You can see the difference clearly. An index plot also makes it easy to see at a glance exactly how much an asset gained or lost, in dollar terms or in percentage terms. Index a plot to $1 and the ending value tells you exactly how much money you'd have at the end of that period. Index it to 0 instead and the ending value tells you the percentage change. By the way, the Quant dashboard available to Patreon supporters now has price and index plots for individual assets, along with comparisons across multiple assets. If you'd like to support the channel and get access, please consider joining Patreon. Candlesticks aren't strictly a quantitative plot. They're a trading-focused way of showing price dynamics during a set period of time. But they're full of information and you'll run into them sooner or later. So here's how they work. A candle condenses 4 numbers into a single graphical representation. The period's high, low, open, and close. The thin wick marks the full range traded. The thicker body makes open to close, colored one way if it closed higher, another if it closed lower. Technical indicators try to predict where price goes next, based on the shape of past price action. Quant metrics, the kind we focus on, measure risk and return using statistics, without claiming to call the next move. Moving averages are the most common technical indicator you'll see overlaid on a price plot. One of many, so here's how one works. A moving average smooths price by averaging it over a set window, say the last 20 days, then plots that average as its own line. As each new price comes in, the window shifts forward one step, so the line moves along with the data. The same data can look completely different depending on how it's plotted. Sometimes it's used on purpose to tell a different story than the data supports, and sometimes it's just a mistake. Here's the most common trick, and a couple more worth knowing. Start the y-axis above 0 instead of at it, and a small move looks dramatic. Cropping the axis turns the shape into a spike. Putting 2 unrelated assets on the same chart with different scales on each axis can make them look correlated when they aren't. Or picking a start or end date that flatters the story instead of showing the full picture. I hope this short overview helped you make sense of some of the basic plots you might encounter in the world. Most quantitative strategies don't have a graphical representation, but these plots can help make sense of the strategy behind them. If you like the channel and want to see more content, please consider joining Patreon, where you'll also get a quantitative dashboard and written materials. Thanks for watching.